Sounds good. Well, this is going to be a tough session, honestly, because of two reasons. We just talked about blockchain, crypto, all the sexy stuff. And now we have to go back to talking about basically credit products. So it's going to be a tough, basically, act to follow. And I know I'm sitting between the audience and their lunch on the last day of the conference. So bear with me. I'll try to move this as fast as possible, but hopefully we'll have fun over the next 30 minutes. So let's talk about Gen Z millennials, right? So why is it important to understand the credit product needs of Gen Z millennials? I think for three main reasons that it becomes quite important. The first thing we need to understand is, given combination of technology, the impact of the pandemic bringing forward innovation, which was probably going to take years to basically filter through. And third thing, which is often ignored, is that Gen Z and the millennials basically have a value and belief system which is very different from basically the earlier generations. And this basically value system and beliefs, along with basically innovation in technology, is fundamentally shaping basically how this generation chooses and adopts credit products. And this generation is going to be the biggest consumers, basically, of products and services 10, 15 years down the road. Therefore, it's important that we basically understand and basically get a foothold within this generation. Yeah? Hopefully, that helps to basically set the context. I don't see too many millennials and Gen Zs in this room, but I'm hoping a lot of people in the audience, essentially, there are definitely some millennials, and hopefully a lot of you have Gen Z children. So that hopefully also increases the personal relevance of this discussion. Cool? Okay, with that, let's dive forward. Oops, some teething issues moving this. No, the slides. Okay. So when we talk about basically credit products, right, we can divide it into, I'm going to focus here basically on the credit products, which are essentially basically the ones most relevant for our day-to-day usage, which is credit, debit, and then the whole basically market, which is developed around e-commerce, which is buy now, pay later. Right? So let's start with basically debit. One important striking feature over the last basically several years has been the explosive growth in debit transactions. Right? So for example, if you look at 2019 to 2020, there was almost a 50% growth in debit card transactions. Now, this may kind of feel a bit surprising in today's world. After all, haven't we all forgotten about debit? It was the poor country cousin of the sexier credit card, where we would use basically the debit card only to pull money out of the ATM or to use it at basically sort of a gas station which didn't accept credit card. So what's happening with this basically something which almost seems like unpacked from the freezer, right? And I think there are two main reasons which are fundamentally important why the good old debit card is making a big splashing comeback. It's essentially linked to essentially the concept of basically de-linked debit card, right? And its adoption by the Gen Z millennials. So it becomes important to understand what really is a de-linked debit card. Right, so traditionally we are all used to using debit card where it's a Chase, Bank of America, Wells Fargo debit card linked to my checking account. I pull it out of my wallet only once if I need cash from the ATM. Or like I said, you are somewhere in basically close to the Grand Canyon, you hit a gas station that doesn't accept credit card and you need to use the debit card. But now, thanks to basically open banking, basically, and essentially the adoption of this product by the fintechs, we have the de-linked debit card, which means that there is a debit card that you are issued, right? Which could be like something like a Cash App, Imprint, Step, Ramp. So many of these fintech players are offering basically debit cards. So it's a debit card issued by this fintech, but at the back end, thanks to open banking, this debit card can be funded by basically any bank account that the customer owns, which could be any of basically the 10,000, 20,000 basically bank accounts that exist in the US, right? And this is essentially basically a feature which is very appealing to the Gen Z millennials. Essentially, they use basically sort of the fintech app in the front because it provides them basically products and services that are relevant for the generation, but at the back end, it's basically could be funded by any bank account, right? The second thing which is driving the usage of the increased usage in the debit card is now have rewards. Traditionally, the way it's worked is The good-looking credit cards have basically cashbacks, reward propositions in order to attract more prime, high-spending customers. Debit card was a utility product, only to be used for very specific instances that we have discussed. They never carried rewards. That's all changed in the last 2 years. All these fintech dealing debit cards that we talked about actually carry very reasonably rich reward propositions, right? And that is essentially forcing the banks to also step up their games and offer debit cards that come with basically reward propositions. So that's the virtuous cycle basically taking effect. There's consumer adoption driven by basically fintechs. Banks want to get into the game, and now you have Discover, American Express, all the traditional financial institutions also offering debit cards which come with reward propositions. So this is obviously one of the key trends. And then obviously, the new game in town, we've all heard about this, buy now, pay later, right? So it's buy now, pay later, could be called point of sale financing, but it's essentially basically any basically financing that's available to me at the point in time when I'm making a purchase. This is obviously the new game in town in the last basically 4 years, right? You can look at the chart which shows the adoption. So roughly about 30 to 35% of basically Americans have used some form of BNPL, point of sale financing in the last last basically 12 months, right? Which is up from where about 2% 4 years later, 4 years back. So what's really powering basically the usage of BNPL? The first is obviously technology and basically the ease of usage. So any mid-size, large merchant website that you go to, you want to make a purchase, a BNPL offering is there. It's easy to use. A few basically KYC SIP-related identity you enter, and bang, within seconds you have a decision. And therefore, what it does is, given its ease of usage, it also removes its price as a barrier to purchase, right? And then one thing we need to understand is one of the biggest basically blockers to use of the credit card by the Gen Z millennials is because credit card comes with the stigma of double-digit interest rates, right? And that is something which is essentially fundamentally at odds with the basically the value and belief system of the Gen Z millennials. And that's one reason why basically their adoption of BNPL is just so high. Because BNPL, a lot of the short-term BNPL plans come with basically zero interest rate, right? And that's essentially appealing. So what's happening? We're seeing essentially basically a mini transformation happening in basically the credit card space. Traditionally, our generations prior to us would start with a debit card. Once our basically when we didn't have credit history, we would basically get a basic entry-level credit card with no rewards. And then over a period of time, as we went in our basically in our journey life cycle, we would get basically sort of a prime reward card being offered to us. That entire basically sort of life cycle is now being basically upended, where you have the Gen Z millennials start with a debit card. The debit card already has reward. Credit card is no longer that appealing to them, and they skip that product and go straight onto basically BNPL, right? So that's essentially basically sort of a fundamental transformation which is happening in terms of usage of credit products, right? Now the question becomes is what are the banks doing, right? As always, banks are playing basically sort of follow-up, and now what you have is banks also getting into the BNPL space by basically offering some form of BNPL, either as a standalone product or as a feature on top of their basically credit product. And which means now, therefore, both generations, the older generation as well as the Gen Z millennials, are adopting the BNPL option. The only difference being basically the younger generation is moving over to basically BNPL products, which are offered by essentially by fintechs, while basically the older generation is adopting basically BNPL basically products that are being offered by the banks. But BNPL is here to stay, right? And one of the key trends that is really happening is having the BNPL option available is almost becoming basically sweepstakes on any credit card product, right? So this is essentially the second innovation. Credit cards are no longer just a 2% min due product, but you essentially have an aspect of BNPL largely being overlaid on all credit cards, or at least the credit cards from the leading financial institutions. Okay, so this all is good. We talked about what's happened over the last four years. Now the question becomes is basically what's going to happen going forward. Yep, I mean, predicting what's going to happen going forward is always the most difficult part, right? And given the rapid, basically, evolution of this space, it's hard with a certainty to basically look into the crystal ball and say what exactly is going to happen. But let's talk about a few trends which are very likely to basically dominate the next decade, or at least the next 5 years. The first thing is basically rewards, right? Rewards have become pretty much basically, not just basically a must to have, but it's really become a significant differentiation of basically the product, right? And when you talk about rewards, rewards can come in many different forms. In its simplest form, it could be a 1%, 2% cashback. We've all seen our credit card statements, it calls out, hey, you earned X amount of rewards basically this month, right? Now, rewards becoming essentially a very key feature of basically both credit and debit products. But what we are seeing is a significant evolution in basically sort of how rewards and cashbacks are offered and used by basically customers. And that requires, in a way, three basically principles which any reward program basically needs to carry. First is the simplicity of the reward proposition. It needs to be easy to understand. So let me give you an example. One of the bank credit cards that I use quite frequently, I got a message in an email, congratulations, you are being offered basically 3% cashback on any basically gas purchase. Well, that seemed quite exciting, right? I mean, we all know where gas prices are. They hurt. 3% cashback on gas, I could take it. Now, when I started to read through the fine line, what it said that this is limited up to X amount per each month. It can only be used at selected gas stations that are not linked to basically any retail chain. And after reading that, I was really confused, where the hell am I going to end up basically using these reward propositions? And this type of basically communication, which is a very sexy headline, but tons of basically fine print, just basically don't work with the Gen Z millennials. It puts them off. Because for one of the most fundamental things where Gen Z is different from millennials and is also different from the older generations is they look for tangible benefits. They are much less enamored with brands and affinity with brands. They will go to basically any brand, any product, which offers them an easy to understand and a tangible benefit, right? So it becomes very important that basically the reward proposition needs to be simple and it needs to be personalized, right? Each one of us, basically, depending upon sort of our background, depending upon our taste, and depending upon our age generation gap, have very different purchase behavior. So so generic reward propositions no longer work. It has to be adopted to basically the category in which basically I basically end up making my purchases. Otherwise, you are no longer basically a relevant card for me. And then now this creates basically a huge challenge as well as an opportunity, is that how do you understand basically each customer, and how do you then create a reward proposition that's meaningful for that customer? And that's where the role of AI ML basically comes into play, a term that we've all heard quite a bit over the last few days, right? And the third thing which is now beginning to take off is gamification of rewards, right? So what is gamification? In simplest form, gamification is just taking a simple 1%, 2% cashback and turning it into something more exciting, right? Either creating basically different tiers of basically rewards, or creating basically some tangible benefit that you would get by basically spending and basically by redeeming those rewards. And this is a phenomenon that we are all aware. Online gaming, gamification of rewards is essentially basically been a key driver of basically sort of increased usage of online gaming. And that concept is now coming to basically cards. The gamification of rewards will essentially be one of the things that basically will sort of differentiate basically the fintechs that are successful with reward products versus others, and is again basically a concept which is very exciting to Gen Z millennials because of its competitiveness, because it creates a community of users, it creates value within an ecosystem which can then be transported into the larger financial system, which is exactly the type of benefits that these basically users are looking for. Cool. So we talked about rewards. How about what's going to happen with BNPL, right? We know there's been an explosion. BNPL now has high penetration, but where does it go from here, right? And before that, actually, let's just talk a little bit about basically the actual delivery of basically the credit service, whether it's a debit or a product. So traditionally, if you think about the mental models that we have had is, you have a credit product, comes with double-digit interest rate, gives me the revolve flexibility and gives rewards. And I need to have basically two different plastics, a debit and a credit card that I basically carry, right? And I use them. Now, with basically the evolution to basically Google Pay, Samsung Pay, Apple Pay, etc., and all the different basically online wallets, that boundaries between basically credit and debit products and BNPL are dissolving, right? In the customer's mind, what the customer is essentially looking for is they need one product, right, which enables them to basically make payments at the merchants that they spend. And after that, the revolve feature, whether it's credit card, whether it's BNPL, is just an additional feature built on top of the same product, right? It is no longer basically three different basically products that I need to basically worry about and manage differently. And that, and essentially organizations that can create this basically seamless basically product experience for the customers are going to be some of the big winners in this basically space. Cool. Okay, and now what's happening with BNPL? So we talked about debit, we talked about credit. What's going to happen in BNPL? I think the onward march of BNPL will continue, right? Point of sale, with the move to e-commerce, basically, there'll be an organic growth which will basically continue to happen in basically BNPL. But one important basically differentiation that's going to basically come forward is if you look at, there are a plethora of players who offer BNPL. There are tons of basically merchants who offer basically BNPL. And therefore, just offering point of sale financing is essentially become a commodity now. It's a commoditized service, right? There is very little differentiation between one BNPL player versus another. After all, how much can you basically create differentiation via pure interest rate or via essentially just basically sexy graphics? Which means that BNPL players will now essentially will make the transition and already starting to make the transition that they want to basically own the customer journey right from pre-purchase to basically post-purchase, which means that they basically then that provides them the opportunity of basically doing two things. Either just like in China, what we have is the super apps, right? So here's an image that you can see of the super apps, the Alipay, the WeChat in China. All e-commerce, all credit, all debit, all installment loan products are all available within essentially basically one app. So that's one basically way of basically evolution. Or even if basically you don't basically go through that full evolution, you essentially basically by owning the customer journey from an end-to-end perspective, you can then start to find ways where you can monetize basically that customer engagement that you have created. And that again is going to be a significant differentiation because like I mentioned earlier, pure BNPL players are going to become commoditized, right? With no differentiation or no control over basically the customer engagement. And then, so that's one path. The second path now that becomes very clear is that embedded lending is here to stay, right? Here, just an image of all the different types of embedded players. And their numbers and how large basically the opportunity for embedded lending could become. But it's become very clear is that either you own the customer journey from an end-to-end perspective, or you have to have a very specific space within the ecosystem where basically the customer is basically doing their activities. And you need to create enough value in that ecosystem to then basically create the customer engagement and then be able to basically port that basically whatever be the value that you could create either in the terms of basically cashback or rewards into basically into the larger ecosystem or into the larger financial space, right? So I guess basically that's really it. So if we summarize, I think the three main things that hopefully we'll all carry away from there is that combination of basically the beliefs of the Gen Z as well as essentially evolution in technology means this space will continue to evolve. And being pure, basically, being a pure payment player or being a pure rewards player will no longer work, right? You need to be either embedded within an ecosystem or focus on creating a super app or basically owning the customer journey. And that is essentially going to create basically new frontiers for basically payment products over the next decade. And that's it. Thank you, everybody. Yes, please.
That's all. Thank you for the insightful view into the credit products. My question to you is, there's going to be a major generational wealth handover, and it's estimated to be around $70 trillion from the baby boomers to millennials and to the Gen Z. Now, research shows that your older baby boomers are more reliant and they like the traditional banking methods, while the younger generations of millennials and Gen Z are more towards digital banking. How do you see the gap being closed where so much wealth is going to be transferred into the younger hands where they're not, their trust in the traditional FIs, financial institution, isn't that great, and they're more inclined towards the digital banking? And we keep talking about crypto versus banks and centralization versus decentralization. The money that is being, the wealth that is being transferred is going to be transferred into the decentralization region from your traditional FIs. How do you see that both FIs and your digital fintechs working together to bridge that gap?
Yeah, great question. So I think that the three things that we need to understand. First, basically, I think that transfer of wealth means basically that the fintech players need to be ready to basically partner with the customer along their basically life cycle journey, right? Meaning you cannot be successful if you're offering just basically one service when the customer is 20 years old, right? But if you create engagement with the customer when he's 20 years old and you can expand your ecosystem to offer basically products and offerings that are relevant when that 20-year-old becomes a 35-year-old, that's really basically the success, that's really the key success mantra. And you don't necessarily need to offer basically all those services yourself because it's not really within the realm of possibility for every basically fintech to offer all services. But it comes back to essentially the super app or the ecosystem. Can you integrate yourself within basically an ecosystem or create a super app which can basically offer basically all those services and capture the value of the customer? And I think it's going to lead to two things. On one hand, it's going to lead to basically this transition where fintechs, for to be successful, have to evolve themselves as their customers' life journey is evolving, and banks need to basically up their game, right? Otherwise, basically, the whole basically model of the banks. The model of the banks is they have deposit money, so they basically borrow short, but then they basically lend long, right? That whole model is essentially basically built upon having access to basically easy deposit money. And the banks need to basically upend their game because that model is no longer going to be basically sustainable with this transfer of generation wealth, because this transfer of generation wealth is going to happen to a generation, a large proportion of them whom have never had any experience or relationship with a traditional bank.
How do you feel about, so like Americans in general are not known to be like savers, like we don't generally have savings and save money like a lot, like in Germany, the population there tends to save a lot of money. Do you think any of this would be more of a game changer in getting the younger people to start having a savings and thinking more long term than they do at the present time?
Yeah, great question. So I think that is definitely basically going to happen. The reason being, as we talked about, one of the core beliefs of basically the Gen Z population is that they look for basically tangible benefits from basically products, right? And it becomes basically goes back to the super app concept or basically the ecosystem concept, is that essentially basically one of the features which basically, for example, a couple of fintechs are essentially basically working on creating credit products that are also basically linked to basically sort of the education, providing basically education advice and funding of education loans and helping this younger generation, get student loans, right? So I think those are basically the type of basically concepts which are going to work, where you have a basic core service, but that core service needs to be tied to basically a longer term mission or tied to a specific basically, sort of goal that this generation has. And that is how you're going to create basically sticky customer engagement and also basically financial literacy for this younger generation.
Any other questions, anyone? Yeah. Well, great. Well, thank you.
Thank you.
Yeah.